Hello guys, welcome back. The topic that we're going to discuss today is the depreciation calculation in SAP. I have seen many FI consultants who are very good at configuring the asset accounting and the depreciations, but when coming to how SAP system calculates the depreciation, there are some confusions. So today, let us try to understand these confusions and have a better view on how SAP calculates the depreciation values. So we are in the Asset Explorer, and let us see an asset which is already created and which is having various depreciation values which are planned. So I'm having two different chart of depreciations with two different accounting standards, and there are different depreciation keys that are assigned to this one. So for this particular depreciation chart of depreciation, the depreciation value is 821.92, and for this one it is 2000. So let us try to understand how these values are calculated. So for this, let us go into the configuration of depreciation keys. Financial accounting, asset accounting, depreciation, valuation methods, depreciation key, and calculation methods. So here we can see four methods, or five in fact: base method, declining balance method, maximum amount method, multi-level method, and period control methods. So let us try to understand each one, and then we will see how these configurations or these methods are used in depreciation key which we assign to the asset. So what is a base method? The two types of base methods are straight line depreciation method and written down value method. So let us try to understand each one. What is a straight line depreciation method? Straight line depreciation method is the most simple and plain depreciation method. Here we will have an asset and it has a useful life. We calculate the depreciation by dividing the value of the asset by the total useful life, and whatever the value we get is the depreciation for each period, and similarly for each and every period we keep on subtracting this depreciation from the net book value of the asset. So the formula here is we're having the asset value minus, if we are having any scrap value which we are deciding, then minus scrap value by the useful life of the asset. For example, let us assume we are having a machine which is costing rupees 40,000, and we decided that the scrap value is 10,000, or we can call this as the salvage value. This is the purchase cost inclusive of all costs which are incurred, and the useful life of an asset is, we are assuming, 10 years. So what is the depreciation value? Depreciation. So the depreciation value is purchase cost minus salvage value by useful life. So we obtain 3000. So the depreciation value for each year is 3000. So at the end of 10 years, the value will remain 10,000, which is a salvage value. So this is how depreciation is calculated in a straight line depreciation method. Now let us go to a written down value method. We observed that in straight line depreciation, the depreciation value remains constant for each and every year, all through the useful life of the asset. Now let us see how it works in written down value. As the name says, it's the written down value. That means the depreciation value keeps on decreasing for periods. So this is mostly used for assets where the depreciation should be higher during the initial years of use, and the depreciation value keeps on decreasing at the later years. So here, how it is calculated. So the value will be, the depreciation will be the purchase cost minus the salvage value by the useful life of the asset. This formula, which is similar to that of a straight line depreciation, is used for the first period. For the subsequent periods, the depreciation is calculated as the net book value by the useful life of the asset. Let us take an example. We have a machine which we purchased at 40,000. We are having the useful life as 10 years. So, the depreciation for the first period is 40,000 by 10, which is 4,000. So, the net book value is 40,000 minus 4,000, which is 36,000. So, for the second period, the depreciation remains as 36,000, which is the net book value of the asset by the total value, which is 3,600. So, the new net book value is 36,000 minus 3,000. It is 32,400. So, if you see, so let us also calculate for the third period. So, again it is 32,000 by 400 by 10, and the new net book value will be the previous net book value minus accumulated the depreciation for this period. So, if we observe, the depreciation value is declining as the years progress, but whereas in straight line depreciation method, the depreciation is always calculated based on the acquisition value, which is the purchase cost minus the salvage value. But whereas in written down value method, only for the first year it is the purchase cost, but for the subsequent years, net book value is used to calculate the depreciation method. So this is the primary difference between straight line and written down value methods, and these are the two types of base methods. So now let us go back to the SAP system. So we understood what is base method. So let us see what are the different values that are present in base method. These are the standard values which are given by SAP for ordinary depreciation and special depreciation. So let us try to understand few of these. So we're having sum of the year digits. This is also a type of depreciation. We're having percentage from useful life. We are having explicit percentage, which means this one, the 11 says the percentage, the depreciation percentage is obtained as a factor of the useful life. That means 1 by useful life, similar to how we have calculated in our example. 12 says the explicit percentage, which means while we are creating the depreciation key, we mention the percentage which should be used for calculating the depreciation. Here, this overrides the net book value factor, the useful life factor. So if the percentage is explicitly given, even though we mention the useful life in the asset, that will not be used to calculate the depreciation percentage. So let us try to understand the declining balance methods. So we mentioned written down value. Written down value is a type of declining balance methods, because here we are seeing that the depreciation value is decreasing. So let us try to understand what is mentioned in the declining balance methods. So here if we see, there are the depreciation factor for declining balance, and there is a maximum percentage and there is a minimum percentage. So let us take the example of what we have created and to that of what SAP had given. So the standard SAP does not have any depreciation factor. It does not have a maximum percentage or a minimum percentage. What is the depreciation factor? So the percentage of depreciation which is calculated from the base method is multiplied by this factor, so that there will be a new percentage rate which will be used for calculating the depreciation. For example, in our example, we had a useful life of 10 years. So the percentage of depreciation will be 1 by 10, which is 10%. So from 10%, this is multiplied with this factor which we are mentioning here, and the total percentage. For example, if the factor is 2, then the depreciation percentage will be 10 into 2, which is 20%. And what is the maximum percentage? Maximum percentage is the maximum limit which should be used as a percentage. For example, in the previous case, the percentage we got is 10 into 2, which is 20%. But if the maximum percentage itself is 10%, then even though the obtained value is 20%, the system will consider only 10%. Similarly, the minimum percentage. If the minimum percentage is described as 15% in this case, let us assume. So maximum is 30 and minimum is 15. But what we have obtained is 10% into factor 2, which is 20%, but the minimum itself is 30%. In that case, the system will take 30% as the depreciation percentage. Now, maximum amount methods. In the earlier declining balance methods, we have mentioned the minimum and maximum percentages of depreciation and what should be the factor which with the obtained depreciation percentage should be multiplied. Now, maximum amount, as the method says, this defines the maximum percentage amount, the maximum amount of depreciation for each period. So here, whatever value we mention, this will be taken as the depreciation if the obtained or the calculated depreciation is more than this. So in our example, the machine cost was 40,000 and we obtained the depreciation amount for that period as 4,000. So if the maximum amount is mentioned as 3,500, so instead of 4,000, system considers 3,500 as the depreciation for that particular period. In this, there are different settings. So here we are having a checkbox which is mentioned as annual. So this annual checkbox, if selected, the system treats this maximum amount as the depreciation value for that particular period alone. If this is not mentioned, if this is not enabled, then the value will be the accumulated depreciation. So if this checkbox is not selected, for example, see this standard one which is mentioned, it is US one. It is having annual. This means whatever amount is mentioned in this one, which is 3,160, is the depreciation maximum amount that is to be considered for a particular period or a particular year. But if we go to the other one, this is not having the annual checkbox enabled. Here the amount is mentioned as 1 million. That means the maximum depreciation that should be assigned for this particular value, this particular asset over the period. That means the accumulated depreciation maximum value should be 1 million. So every year it can be any other value below this one, but after certain years, the accumulated depreciation, if it is crossing 1 million, then the system will consider only 1 million as the accumulated depreciation and the subsequent depreciations are not calculated. What is a multi-level method? So earlier we have discussed about straight line depreciation and written down value depreciation. So if we want the depreciation to be calculated different for different periods, or if we want the system to use various depreciation methods together as a single depreciation for an asset, then we use multi-level methods. So let us try to understand. I'm just taking an example. Here it is mentioned as 10%, 5% and 2.5%. So here we are seeing that the depreciation is starting from the ordinary depreciation start date. And if we see the levels, it says for the first 4 years, the depreciation percentage is 10. And for the next 3 years, that means 7 minus 4, it is 5%. And for the next 14 years, the depreciation is 2.5%. So this value which is mentioned in the years is the cumulative value. For the first one, it is 4 years, and in the second row, it is mentioned as 7. So that means 7 minus 4, 3. So for the 3 years, after the first 4 years, it is 5%. So this is 25 minus 11, which is 14. So after the 7 years, for the next 14 years, system will consider the depreciation percentage as 2,500. So this is how we can mention multiple percentages by using this configuration of multi-level method. So now let us jump into configurations. Declining balance methods. So here I'm going to use a standard one. I will be using 12 and 11. So whenever I want the depreciation percentage to be calculated from the useful life, I will select as 11. And when I want to mention an explicit percentage in the depreciation key, then I will go for the value 12. Declining balance methods. So here I have created a declining balance method value. So here I will take this one as factor as 2, and maximum percentage let me take as 40 or 30%, and minimum percentage I will take it as 1% or 5%. Let it remain 5%. Save it. Maximum amounts. So I have created one maximum amount method. I have mentioned the value as 2000, but let me change for this one to 30,000 or 10,000. So now let me create a multi-level method. Let us create a straight line depreciation method with percentage or with useful life. Validity start. I will take it from the capitalization date, and let us go to the levels. So this is valid for all the years, so I will mention it as 9999. But if you want this method to be valid only for one particular year, then you can mention it as that particular year value. For example, if you mention it as 2020, so all the assets that are capitalized in this particular year of 2020, this particular multi-level method will be applicable. So years. So this years mention for how many years we want to use this percentage which we are mentioning here. So I will use only one level for this one. So let us do not give any value in the years, and even in I will give as 99. So for all the years, this should be the percentage that should be considered. So this is period. So if you want to describe each level at even a period level, for example 2 years and 5 periods, 2 years and 5 months, then you can give it as the value of years as 2 and the periods as 5. But in my case, I want the same percentage to be used for all the years, so I will mention it as 999, and even if I do not give any value in the period, it works fine. So what is the base value? So earlier we saw the base value on which the depreciation to be calculated is of various types. It can use an acquisition value or it can use a net book value. So in this case, as I am doing a straight line depreciation method, I will go for an acquisition value. So I have mentioned this one as useful life, so there is no percentage. That means the depreciation percentage is not explicitly mentioned, but it is picked from the useful life that is mentioned in the asset. Save this. Now let us try to create another multi-level method with percentage. Same for straight line method, but with percentage. Explicitly the percentage is mentioned here. Let us go to the levels. So here I will mention the percentage as 10. Also, now we have created this for straight line depreciation. Now let us create a multi-level method for written down value method. Here also we will consider useful life to calculate the depreciation percentage. So now we will take this as ordinary depreciation start date. Let us go to the entries, and same it is for all the years, base value. So this is the written down value method. So the base value for calculating depreciation should be the net book value. So I will take it as net book value, and I will use the same percentage here, or probably I will use a different percentage. Let me make it as 15 and save it. Let me once go back and check what we have mentioned for A06 capitalization date. Okay. So now let us create another written down value method with percentage. Sorry, in the previous one we did a mistake. We had mentioned the percentage, but we don't want the percentage to be mentioned. So however, as we copied, the percentage is available here now. It's fine. Let us go to the previous method and delete the percentage because we want to use this without percentage. Okay. So we have defined 4 multi-level methods, 2 for straight line depreciation and 2 for written down value. And each of the method we have defined one for useful life and one for explicit percentage. So let us check what is a period control method. So here there are 4 values for acquisition, for addition, for retirement and for transfer of an asset. So this period control mentions how the depreciation values are to be treated when either of these transactions are performed on any asset. So let us try to use the default one. Let us try what does this mention. So when an acquisition is done not on the first date of a period but on the date at the middle of a period or any other date other than the first, then how the depreciation is to be calculated. So here it is taken as 0,1, that means pro rata at a period start date. That means if the depreciation is done on today's date, for example, today is 8th, then it should be calculated as pro rata basis, but not for 31 days of this month, but only for 23 days. The same is also for any addition of a value to the asset. So once we purchase an asset, once the acquisition is done, there are probable chances that you want to add more value to the asset. So when more value is added, the net book value will increase. So once the net book value increases, how the depreciation is to be calculated? Again, here also we are mentioning that it should be pro rata basis from the start of the month. So in case of retirement, it says pro rata up to mid period at the period start date. That means if the asset is retired on, for example, 8th of a month, then the depreciation should be calculated at least up to 15th of that month. Even though the retirement is done before 15th, the depreciation should be calculated till 15th of that particular period. And the same is also mentioned for the transfer of the asset. So even if the asset is transferred on any date between 1st and 15th, the depreciation should be calculated for that particular asset till the 15th of that period at a pro rata basis. This should be done by the retiree. Now let us create depreciation key. I will create this for straight line depreciation with no percentage. So I'm not using it. Let us first start with the basic case, with a completely simple case. I'm not using any value for a maximum amount. So I'll enable period control according to fiscal years and depreciation today. And let us go to the calculation methods. So here we are mentioning it as an ordinary depreciation. We are changing it as from start of depreciation. So here we can see whatever the methods that we have configured till now, we need to mention those methods here. So what is the base method? So base method, we are using this as from the useful life. Declining balance method, we have mentioned one declining balance method, but as we want to see the simple case, I am not taking anything. I will use the standard one, which is 000. Period control, we have checked the standard one, 001. And multi-level methods, we have created a multi-level method, straight line depreciation without percentage, Z03. Sorry, it's A05, I think. Let us check. Yeah, it is A06, straight line depreciation without percentage. So it is with useful life. Okay. So now what is the class? We discussed that there are two kind of base methods, straight line depreciation and declining balance depreciation. So this is straight line depreciation. Now automatic change and save it. It says check the treatment of useful life. Okay. Okay. And also let us create another multi-level method for declining balance, that also without percentage. So the depreciation percentage will be not explicitly mentioned, but it will be picked from the useful life of the asset. Here also I am not mentioning any maximum amounts. We will be using same. The percentage is to be calculated from the useful life. There is no declining balance method, no period control. We are using standard in all the cases. In case of the multi-level method, let us create letters A08, which we mentioned as the declining balance method with useful life. And here we'll mentioning as declining balance depreciation method. Save. Okay. Let us activate the two depreciation keys that we have defined. Let me create an asset. I will acquire the asset by a vendor posting. So in the depreciation areas, let us give the depreciation keys which we have created now. So we have created A006 and we have created A007. This particular asset class is having two depreciation areas, one for book depreciation and one for tax depreciation. So for each of this, I have given a different depreciation method. So useful life, let us give it as 10 years. And save the asset. Now let me post an acquisition value for this one. We have the invoice. So let us select the vendor. I will take the amount as 10,000. So we will debit the asset. The asset we have created is building 3. And the transaction type, external asset acquisition. The amount is this one. Okay, the acquisition is done. So now let us go to the Asset Explorer and let us check the values for this particular asset. So we can see that acquisition value is now 10,000, which we have posted by a vendor invoice, and the ordinary depreciation for the book depreciation chart of depreciation is calculated as 813.70. So now let us try to understand how this is obtained. And before that, if we go to the comparisons, we see that the depreciation value is same for all the periods. So this is why, because we have selected as a straight line depreciation method, and here the base acquisition value is used as the base value. So the depreciation is calculated equally for all the periods. And for the first period, the depreciation value is slightly different than 1000 because we have used the period control as 01, which is pro rata from the start of the month. So now let us try to understand. So this is the book depreciation is having a straight line depreciation key. So the total value is 10,000 and there is no salvage value. By here we did not mention any explicit percentage. The depreciation percentage is to be obtained from the useful life. We have mentioned the useful life as 10. So it is 1000. So this is the value. So you can see that for all the other months it is calculated as 1000 except for the first and the last periods because these are slightly different. So 1000 for 365 days. So that means let us for a better understanding, let me go here. So the acquisition value is 10,000. Useful life is 10 years and this is an SLM method. So for the first period, or as the depreciation value is same for all the periods, it is calculated as 10,000 by the useful life, which is 1000. But this 1000 is for 365 days. But we have acquisited the asset on 8th of June. That means after 8 days. So now let us try how we can get that value. So now the fiscal year which I am using for the company code starts from April. So now we have lost 3 months, which is April, May, and in June also we have lost 8 days. So 30, 31 and 7. $68 days. So the remaining value is 365 minus 68, 297. So for 365 days, if the depreciation value per year is 1000, then what is for 297 days? We can calculate it as by 365 into 297. So it is 813.69, which is 813.70. Let us verify in SAP. So we can see 813.70. So this is how the depreciation value is calculated for a straight line depreciation method. Now let us go for tax depreciation. So for tax depreciation, although the depreciation value for the first period remains same, if we go to the comparisons, we can see that the depreciation value is declining for each and every period. So here we see that the depreciation value is, let us go and display the depreciation key. So here we did not use any explicit percentage. We mentioned that the depreciation percentage should be taken from the useful life. So let us try to calculate this one using the Excel. Acquisition is same, 10,000. Useful life is 10 years. It is written down value method. So for the first period, ideally it should be 10,000 by 10, which is 1000. But with the same logic, as this is acquisited on June 8th, we should calculate it for only 297 days in that year. So it will be 813.70. So now what is the new net book value? So the net book value is 10,000 minus 813.70. So for second period. So for the second period, as per this formula, it will be the net book value by the useful life, which is the net book value by the total useful life, which is 918.63, and the new net book value will be minus this one, 8267.67. Let us verify these values. Let us go to comparisons. The first value is 813.70. We got 813.70, and the second one should be 918.63. It is 918.63. So if we go on calculating for each and every period, this will be the depreciation values for each and every period. So now we understood how a basic straight line depreciation and a written down value depreciations are calculated based on the depreciation keys. Now let us make this a bit more complex. Now let us try to change the depreciation key. Now, even at this point also, I don't want to, or else I will create a copy of this one. Let us copy this one and make it as A8 straight line depreciation with percentage. I don't want to give any maximum percentage. Here the ordinary depreciation is not based on the useful life, but it should be based on the explicit percentage. And this one I want to keep it same, period control, and let us change the multi-level method. The multi-level method, we have used straight line depreciation with percentage. Let me quickly check what is the percentage that we have mentioned while creating this multi-level method. Yeah, we have mentioned it as 10%. Okay, we mentioned it as 10%. So this is straight line depreciation method, and the remaining values still remain the same. Now also let us copy the written down value method and we create a new one for WDV with percentage. So I'll mention this as 15%. I remember it as 15%. I'm not mentioning any maximum amounts. This one, let it be, I think it should be 9. Yes, it is 15%. Sorry. So the error message that the system has given is it says entering percentage is not allowed for depreciation method D. Depreciation method D is this base method. We mentioned it as from the useful life. But if you want to mention percentage, we need to change it to explicit percentage. And we let us mention this as 9. Save it. It is saved successfully without any errors. Now let us activate these depreciation keys. Okay, both are active. Now let us change the depreciation keys that we have given in the asset. Now it should be A8, A9. I mean, ideally, we should not change the depreciation key once the asset has been acquisited, because if we do that, already if depreciation had been posted for a few periods, now the system will recalculate all the depreciations and all the depreciation values will be overwritten. That is what this error message, this warning message says. But let us, for the training purpose, let us override this error message and let us check what is the value in the Asset Explorer. Refresh, book depreciation. So the book depreciation value still remained same. It remained same because if we are using useful life, 1 by 10 is equal to 10%, and now if we are using percentage method, it is again the same percent. So acquisition value is 10,000, percentage is 10%. So that is why, as both values are same, we again got this entire same method here. So this is straight line depreciation and this values remain the same. Now let us calculate for this one. acquisition value 10,000, useful life is 10, and this is return on value method. And the percentage here, we should not use useful life, so we are giving as 15%. So we got 1500 as the depreciation for the first period, but that is for 365 days. But here we need to calculate only for 297 days. So the depreciation will be 1500 by 365 into 297. So it is 1220, and the net book value will be acquisition value minus depreciation. So again, similarly for the next period, it is the net book value into 15%. So let us also update the net book value accordingly. So let us check if these are the values in the system. 1220.55. So here if you see, it is 1220.55, and the net book value is 8779.45, and next one is 1316. So if we go on calculating for each period with this formula, we are getting a proper value. So we are fine till here. So in my next video, let us see by applying various other methods like maximum amount, maximum percentage, minimum percentage, and let us see how that will be calculated by the system. Thank you.